All right, so I want to talk to everyone out there who's watching the video right now about some tips on what you can do to look for quality trade setups. You know, it doesn't really matter what instrument or market you're trading, but today I'm going to show you specifically here on the NQ futures what I look for, and the same thing that I do. What I'm going to show you here on this chart here, I do, or in this market, I do on other markets too. So it doesn't matter what you're actually trading. It could be the ES or the micro ES. It could be gold. It could be the Dow, you know, the YM. It doesn't really matter what you're trading. It's all about finding ways to, you know, kind of increase the confluence of your trades, right? So one of the things that I first and foremost always need to pay attention to, and I recommend this highly to anyone who's watching the video, is market structure. That is going to be your saving grace. That's going to help you determine the direction which you should trade. Now, I trade, you know, using multi-chart confluence. I'm using a higher base chart to mark up, you know, supply or demand zones, because that's primarily what I'm looking for when I'm trading. Off my higher base chart first, mark up these nice quality zones that I see where the market, you know, didn't come back to, but it could still, when it does retrace back to them, you know, provide opportunities in which we can look for trades. All right. And most times what I'm doing is looking to see, okay, if the market is tapped back into a zone that's off a higher base chart, is there a smaller zone on my lower base chart inside the higher base zone? Okay, that kind of just raises the confluence. Now it really works well when you're following structure in the market and you have a higher base zone, say for example, that's happening within the session, and the market pulls back to it within the session. Okay, and this is a valid supply area here, which I want to talk about. So what we get is the first break of structure to the downside right here. Now we didn't take out any, you know, significant areas of structure to the left hand side. There's smaller swings to the downside, and I talked about this in prior videos on what to really, you know, look for if we're looking for like a sign of a reversal. We want to see where the market is making this kind of move to the upside, making these higher highs, but then it comes down and makes a lower high, doesn't take out this high here, and then we get the first structure break to the downside with a continued break lower to where it breaks below this area here. So we're breaking below this area structure, and breaking below this area structure, as well as breaking below this area structure, and haven't made a new high. So that makes sense. Okay, so that's going to let us know or give us a sign that the market is trying to reverse to the downside. Now, we didn't full on get that. We got the first break here, pulls back. This is a supply area, so don't get me wrong. Even though we have, you know, we haven't completely you know, broke structure, made a second break here to the downside, we still have this first break of structure to the downside. The market pulls back. This is a valid supply area. Now, one thing that helps me identify, is it a high quality versus a low quality supply area, is that if I look at the zone itself, I mark it up, okay, right here, which is off the, let me correct this a little bit. That last bullish candle to the upside, including the wick of that bearish candle, to the downside of that bullish candle, the wick of it. So I'm drawing from the top end of the wick of that bearish candle to the bottom end of the wick of that bullish candle. All that has to be included. There's a small gap. So when the market broke below that bullish candle, the wick of it, the first candle broke, and then that next candle broke below, there left a gap on this candle. See that bearish candle right there? It did pull back some, but it never filled in the gap on the body that in between the bottom end of the bullish candle there and the body of this red candle right here that broke below the that bullish candle to the upside right here. So this candle here broke below. This candle here came back with the wick of it, but it never closed in this area. I mean, you're probably talking about a point there, 3-4 ticks. So it has to fill in that area, okay? Those are gaps. It was pretty much titled as a unmitigated zone, which hasn't been covered yet, hasn't been tapped yet. So I like to see those type zones kind of, you know, form. So when the market comes back to that area, this is a high probability supply zone within the same session. It raises my interest at the possibility that the market will try to push lower. Then if I see whether we start to get bearish movement on the lower base chart, say for example the 24 range chart, which is my entry chart, I'm basically looking for the same thing. Structure breaks to the downside, pull back. So then if I get that, then where I have a supply zone off the lower base chart that's formed, now it's like I have tapped into a higher base supply zone, breaking structure lower on the lower base chart, and then it pulls back to a key area supply on the 24 range chart. For me, my lower base entry chart, then I'm going short. As simple as that. So you see that I'm on my lower base chart, right? Above me is that big box. That's that higher base supply zone, okay? So typically what I'll do is wait to see was there a supply zone on the inside of the larger base zone. I don't believe there was, but let's see here. Not one that I got tapped into. This would have been one if it got tapped into, but the market never did. And that's fine. So then what I'll do is I'll wait to see if we get a structure break lower. All right, so the market pushed down, pull back, broke structure here. We broke below this low here and this low right here. It follows suit on that pattern that sets up to give us for a sign of reversal. So when it made this high right here, it came down and pulled back. It didn't break this high to the upside. So it's trying to reverse. It breaks structure here and it breaks it here, pulls back. Now there is a supply zone resting right here. Okay. So we've got it tapped into higher base supply zone. Now we're breaking structure on the lower base chart. Here's a supply zone right here. So when the market taps into it, I'm looking for, if you want to, you can go aggressive on the first, get in aggressive on the first bearish candle back to the downside when it taps into the supply zone on the 24 range, which will primarily be around about 60,683, or wait for the break and close and get in down here at 673. So you're getting in maybe 5 points a little later. And then the market just runs to the downside. The key to all this is really following the structure of the market. All right, following structure and identifying those key gaps back at the zone. That gap at the zone is definitely going to make up the difference, or let you know, is this high quality setup, okay, or is this a low quality trade setup just as well. Then if I look back at my lower base chart, we can see what's going on. The market taps that area, didn't break structure. Again, lower. I had this zone here marked. This was yesterday. Okay, so I probably can go ahead and just delete that. I mean, I'm gonna leave it there because it is still a high probability zone that hasn't been tapped into. But I'm gonna be mindful at some point if we get back to it. Can the market bounce at it? Yes, it can, but it can just as well break through it if we're starting to form, bullish sentiment back to the upside. Like we started that structure I just showed you to the upside. It can start to do that back to the upside. So, when it comes to a bearish cycle or trend, we're doing something like this, making lower lows on lower highs, but then we can start to reverse and start to do this and break higher. First break of structure, second break of structure right here. This could be a sign of reversal back to the upside. And if we follow suit down here somewhere, after it at some point stops and then starts to turn around and reverse and follow this pattern back here to the upside, it could take out these highs right here. Okay, I mean, take out these zones right here that we have marked up if we're still continuously switching from a bearish trend back to a bullish trend, if you understand. So it's just like right here. If you see what happened right here, okay, we were bullish, now we're bearish, okay? So we're breaking structure lower, right? Yeah, this is a high quality, I should say, demand zone resting here, right? The reason why, because there's a gap at it and it hasn't been tapped into yet, but it took several days for it to come back to that zone. So I'm going to be very mindful about trading that area and maybe just scalp it, if we get some rejection. And I'm looking back at my lower base chart. But what I'm trying to let you know here is that you see how long it took for it to come back to this actual zone. And yes, we had multiple areas of confluence. We had the demand zone. It was at a 20,300 round number. It did pop to the upside, but then eventually it pushed right back down lower. Why? Because of the cycle, because of the trend to the downside, where it now had reversed and we're making bearish movement to the downside. All right. So you have to be mindful of things like that. The same thing I just showed you a minute ago. If we start to reverse and start to form a bullish cycle back to the upside, be mindful if the market comes back and taps this area right here. Be mindful if it comes back and taps, say, well, let's say this area here and these areas up here and possibly here, because all this happened in yesterday's trading session, a whole nother day. Okay. So now I have this area here marked because we are still breaking structure lower. So this is a valid supply area that I have marked that I'm waiting to see what's going to happen. Took a few trades today, but I'm not going to go into detail about the trade setups that I took because I cover that a lot here on the channel as well. I post setups over on the Discord. But today, I've been focusing on the markets. I haven't really been 100% And I've been busy too, doing some other things on the Discord. But anyways, just about every day I'm posting a few trades, here and there over on the Discord. And I break those trades down, from time to time I go and I'll make video content for a private group of members who are interested. And anyone can be part of it. It's only $6.99, but that's where I go into detail about the trade setups that I do take, so you can grasp and understand what I'm talking about when it comes to these high quality setups. Following market structure, looking for the gaps, understanding where to place your profit target and place your stop loss, all this stuff. There are multiple and tons of videos that I've already made covering the type setups that I take and trades I take surrounding the strategy that I actually trade. These are all quality setup trades. Now, if you're interested in becoming an elite member, if you just scroll down to the bottom portion of this video right here in the description, you'll see a link right below the Discord link. The first one's titled Discord, the second one's titled Become a elite member. Once you click on that link that says Become an Elite Member, 2 tiers will pop up pretty much. The first one's $4.99, the second one's $6.99, but the second one for $6.99 gives you direct access to everything. $6.99, and that is a month. But what it does give you, it gives you the trade breakdowns that I've covered, tons of them already on there. The great video content covering market structure that I covered in a video, as well as the video playlist, okay? But that's what I wanted to, kind of throw out there for anyone who's interested, because people always DM me asking how they can become an elite member, and it's a very inexpensive fee. I mean, spend time watching the videos. Definitely spend time watching the trade breakdown videos, because they have a lot of value behind them, and they walk you through the setups that I take as if you're sitting right next to me. I walk through those setups on the video. And just kind of go through my mindset. But I just wanted to talk about that today, the difference of looking for high quality versus low quality setup. Yeah, like for example, here on my 24 range chart, we can see we're in bearish mode today. The market's been selling off like crazy, but there's still opportunity to look for, trades, right? So when the market started pushing them back higher here, we get that trend reversal, that I showed you, what it looked like this right here. If we're coming from the downside, I'll show you one more time. Downside, doing this kind of movement here. All right, and then we get the reversal. Okay, it's pulling back, and then it's breaking. Structure here to the upside. Pushed up, pull back, broke structure. So it broke it here, broke structure here to the upside. Then we broke structure here to the upside, and then we get a pullback to a beautiful area of demand right here. All right, look for the break and close of the candle, go long. All right, now this is directly off the 24 range chart, as you can see. You could go for your first 1-to-1, whatever the case may be. You can go for the market to start covering and filling in gaps, resting back to the upside. It took out this high here. So you can set yourself up, even if you trade, for anyone that trades, like using a risk reward rate of a ratio of 1-to-1, right? All right, so maybe waiting for the break and close of this candle here, this green candle right here to the upside. All right, that's the entry point there at 20,186. All right, and then your stop is going to go on the back down here, right? So then you're aiming for basically a 1-to-1. I think this is set up to be like a 1-to-2. A 1-to-1 is going to be just a few points there. I mean, you're getting into 86, and you're picking up 6 plus points right there. If you go for a 1-to-2 back to the upside to take out this area above right here, this is the high right here. Okay, then you're aiming for, this is at 98, so you're picking up a lot more. You're picking up 12 points right there, or more. If you probably could have picked up 3 additional points right there, and picked up maybe 15 points right there. But we're scalping off the 24 range. I'm trying to get you to see, so you have to understand that. I talked about this in a prior video. Going in for a 1-to-1, take your motion position off, and then letting the remaining portion run. Okay, last contract. All right, how do you do that? I talked about that in video as well. Every time price pulls back, it makes a new higher low. Move the stop loss up. Okay, all right. But it all depends on what the market is doing. So I was trading directly off the 24. Looking at structure based off of 24 for this setup here, this wasn't one of those where the market tapped into I think, let's see here, 1213. Let me see something right quick. 1213, yeah, 1213. Not 1213, guys. I'm sorry, 1013. Yeah, where it taps into any significant, say, demand zone. I just saw strictly on the 24 range chart where the market was breaking structure to the upside, and then, found a beautiful area on a pullback to a key area. Again, look here, the gap resting back at the zone. This candle here broke above the last down bearish candle. So when it continued pushing higher, that candle, the next candle that formed above it, see, it didn't immediately come back and pull right here down to the downside. So it left this gap back at the zone. And when the market pulled back and tapped into the zone, that's where you're going to get a nice quality setup. So that's what I'm talking about, following structure of the market. Again, when the market does pull and tap back into an unmitigated or gap area on the higher base chart, okay, once you see that, and then you start to show some signs where it's reversing, it's breaking structure on the lower base chart, especially if we're, like, say, for example, at a demand zone on the higher base, then it's breaking structure to the upside and giving you that reversal, okay, on the 24 range, the lower base chart. Then look for a pullback to a key area of demand on the lower base chart, because now you got two things going on: demand on the higher base, demand on the lower base. Look for your entry to go long. As simple as that. But that's all I wanted to cover today in this video about finding ways to solidify, basically, to find high quality setups trading the NASDAQ futures or any particular market. Okay, you can learn this if you spend time watching the video content, and it just as well become a elite member. That's basically, like, it's very inexpensive. We're talking about like a price a cup of coffee that most people probably spend on daily, and it's probably more than that you're probably spending for a price a cup of coffee for $6.99 a month. Most people are spending that between $5 and $10 a day on a price a cup of coffee. I'm talking about for $6.99 about joining and becoming part of something that could change, be game changing, and change your life. Okay, so if you're a beginner trader out there, doesn't matter what level trader you are out there, that's something there that you can actually sign up for and spend time watching those videos, and you can educate yourself. All right, again, the link is down in the description portion of the video to become an elite member. But that's all I have. If you're not a current subscriber, please take the time to go ahead, click on the sub button right now. Make sure to turn your post notifications on so you do not miss one of the uploads here on the channel. And last but not least, you see the like button. Please take the time to go ahead and click on that like button if you found value in today's video content. Take care.